Today, we turn to AMD, a leading semiconductor company specializing in high-performance CPUs, GPUs, and AI accelerators, serving data centers, PCs, gaming, and embedded markets worldwide. In Q4 FY25, AMD reported $10.3 billion in revenue, up 34% year-over-year, driven primarily by strong data center revenue of $5.4 billion. Gross margin expanded to 54%, driving operating income to $1.8 billion and net income to $1.5 billion, equivalent to a 15% net margin. EPS came in at $1.53, exceeding market expectations, reflecting stronger profitability supported by record data center performance and rising AI accelerator demand. With continued momentum in EPYC CPUs and Instinct GPUs, AMD remains well-positioned for sustained growth and further margin expansion ahead. Over the past several years, AMD's quarterly revenue expanded from $3.4 billion at the beginning of 2021 to $10.3 billion by the end of 2025, though the chart shows clear cycles along the way. Revenue peaked in 2022, softened through 2023 amid PC and embedded weakness, then re-accelerated strongly from late 2023 as data center demand surged. Data center is the main growth engine, rising from $0.6 billion to $5.4 billion, delivering a 45.6% CAGR, driven by EPYC processors and Instinct AI GPUs. By contrast, client and AMP gaming recorded a modest 2% CAGR, reflecting the post-pandemic PC correction before stabilizing recently. Meanwhile, embedded declined at a minus 10.6% CAGR following the post-acquisition normalization cycle. However, AMD secured a record $17 billion in embedded design wins in 2025, up nearly 20% year-over-year, strengthening long-term revenue visibility as these programs move toward commercialization. CapEx from the top hyperscalers, Amazon, Microsoft, Alphabet, Meta, and Oracle, is projected to approach over $650 billion in 2026, with roughly 75% allocated to AI infrastructure, reinforcing the structural scale of the AI build-out. The sharp rise in hyperscaler spending closely aligns with accelerating AI chip revenue across the industry. NVIDIA remains the largest beneficiary, while Broadcom benefits from custom AI silicon and networking demand. For AMD, AI-related revenue is scaling alongside this investment cycle, supported by Instinct accelerators and EPYC data center CPUs. Management is targeting 60% CAGR in data center revenue and up to 80% CAGR in AI accelerators over the coming years. In 2025, AMD achieved record x86 market share gains across multiple segments, with total x86 unit share reaching 29.2% and 35.4% of x86 CPU revenue, the highest in the company's history, according to Mercury Research. Desktop CPU unit share climbed to 36.4% with 42.6% revenue share, underscoring strong rise in performance, while mobile unit share hit 26%, the highest ever for AMD. Server CPU unit share reached 28.8% with 41.3% revenue share, driven by robust EPYC adoption in cloud and enterprise deployments. These gains reflect AMD's expanding footprint against longtime competitor Intel, particularly in higher margin segments where premium pricing and product competitiveness are most pronounced. Desktop discrete GPU shipments have declined from cycle highs above 20 million units per quarter to the low teens millions more recently, reflecting post-pandemic normalization and weaker PC demand. AMD's market share has compressed significantly over time, from the mid-30% range a decade ago to below 10% in the latest quarter. This decline coincides with a broader industry shift toward AI infrastructure. With hyperscaler CapEx projected to exceed $650 billion in 2026, capital allocation has increasingly favored data center accelerators over consumer desktop GPUs. At the same time, AMD has strategically prioritized Instinct AI accelerators and EPYC data center CPUs, segments offering higher margins and stronger long-term growth visibility. As investment and wafer allocation shift toward AI products, Radeon desktop GPUs have become less central to AMD's growth strategy, contributing to its reduced share in the discrete desktop market. 2026 marks a pivotal turning point for AMD as the semiconductor industry shifts from the AI hype phase to large-scale execution. Global semiconductor revenue is projected to reach roughly $975 billion, with AI data center TAM expanding toward $1 trillion by 2030. In this environment, AMD is positioning itself not as a component supplier, but as a full-stack AI infrastructure provider. At the core of this strategy is EPYC Zen 6 Venice on TSMC's 2nm process, scaling up to 256 cores per socket, alongside Instinct MI 450/MI 455X accelerators featuring up to 432 GB of HBM4. Deployed within the 72 GPU Helios rack system, AMD is effectively selling an integrated AI platform rather than standalone chips. Management is targeting 60% CAGR in data center revenue and up to 80% CAGR in AI accelerators over the coming years, underscoring confidence in structural AI demand. At the ecosystem level, the shift to UDNA and the expansion of ROCm 7.0 with native PyTorch support aim to narrow the CUDA gap, while the rapid rise of AI PCs extends AMD's reach from cloud to edge. However, 2026 is ultimately about execution. Dependence on TSMC's 2nm capacity, rising HBM costs, and geopolitical pressures remain material risks. The year will test whether AMD can convert architectural leadership into sustained, scalable market share in the AI era. Total operating expenses of AMD increased from approximately $2 billion in early 2022 to $3.8 billion by Q4 2025, reflecting a steady upward trend as the company scaled its operations. Research and development expenses rose from about $1.1 billion to $2.3 billion, representing roughly a 30% compound annual growth rate, driven by continued investment in next-generation EPYC processors, Instinct AI accelerators, and advanced semiconductor technologies. Selling, general, and administrative expenses also expanded from around $0.6 billion to $1.2 billion, growing at a similar pace as AMD strengthened its global sales network and enterprise AI commercialization efforts. Meanwhile, amortization expenses declined over the period, reflecting the normalization of acquisition-related intangible costs, further improving the overall expense mix towards strategic growth investments. From 2022 to the present, AMD has effectively gone through a full semiconductor cycle. From the peak in early 2022, when pandemic-driven PC demand surged, to a deep downturn in 2023 marked by excess inventory and weakening consumer demand. During that trough, net income declined to a loss of $0.1 billion, corresponding to a -3% net margin. Beginning in the second half of 2023, business conditions gradually stabilized. Net income rebounded to $0.7 billion, with net margin recovering to 11%. The improvement became more pronounced throughout 2024 and 2025. Net income increased from $0.3 billion in mid-2024 to $1.5 billion by the end of 2025, while net margin expanded from 5% to 15%, reflecting stronger operating leverage and a rising contribution from data center and AI-driven revenue. From 2022 through 2025, AMD's reported revenue has generally tracked close to market expectations, demonstrating improving demand visibility following the 2023 downer. Looking ahead, consensus estimates project full-year revenue of approximately $46.5 billion in 2026, representing about 34% year-over-year growth, followed by $64.8 billion in 2027 and $83.2 billion in 2028, sustaining strong multi-year expansion driven by AI and data center demand. Earnings per share show a similar trajectory. Non-GAAP EPS is projected at $6.62 in 2026, increasing to $10.65 in 2027 and $14.31 in 2028, reflecting improving operating leverage as higher margin AI products scale. As earnings grow, forward valuation compresses, with the projected price-to-earnings ratio (PE) declining from roughly 30 times in 2026 to around 14 times by 2028, assuming execution remains consistent. AMD's share price has remained volatile amid broader market fluctuations and heightened focus on AI execution. Investors continue to monitor growth, sustainability, and margin expansion as the company scales its data center strategy. Based on consensus from 48 analysts, the average 12-month price target is approximately $288, implying about 44% upside from the current price near $200. The bull case stands at $365, while the bear case is around $210, suggesting a favorable risk-reward profile. Analyst sentiment remains positive, with the majority rating the stock strong buy or buy, reflecting confidence in AMD's long-term AI-driven growth trajectory. Thank you for watching. The information presented in this video reflects opinions at the time of publication, is based on sources believed to be reliable, and is provided for informational purposes only. It does not constitute investment advice or a recommendation.